Morning, my name's Jason Gerlis and I run the corporate team here at Ocorian. I'm lucky enough today to have Darren Becker with me, who runs Emphasys Technologies, an Ocorian company here in Philadelphia. So I'm going to be asking Darren a few questions about what they do and what he's seeing in the marketplace. Please bear with us because Darren has actually lost his voice today, but I'm sure he'll still do a sterling job. Anyway, morning, Darren.
Morning, Jason. Thank you. I appreciate the confidence that you bestowed upon me.
No problem. So Darren, tell me a little bit about Emphasys, what you do and the value you bring to your clients.
So Emphasys is engaged by trustees in the securitization market. We primarily work on residential and commercial mortgage-backed securities. The reason why we work on those primarily is because they are structured as REMICs. That is short for real estate mortgage investment conduits. So it allows investors to engage and invest in the mortgage market without dealing directly with the risk associated with owning those mortgages. Those REMICs require a specific tax reporting variety of forms. One of which is reporting the original issue discount, so the OID on the regular interests in the transactions. We provide quarterly Scheduled Q reports for the residual holders, and we produce an annual tax return that gets filed with the IRS. So we don't have any specific reporting that we produce for the public per se. It's more complying with the IRS regulations. These are responsibilities in the governing documents that are given primarily to the trustees, aka bond administrators, paying agents, calculation agents. And some of those parties within the market and the securitization market choose to outsource that work. They don't want the risk. They don't have the tools to perform that work. And in doing so, we realized a long time ago that it made sense for them to outsource that work to us, and we could provide a service where we shadow their work, right? So in order for us to perform those calculations, we have to have a working cash flow model. So we structure, reverse engineer the transactions, tie out to the documents decrement tables, underwriter provided cash flows. Our clients do the same exact thing. We meet in the middle to discuss any ambiguities in the deal documents to confirm the intent of those transactions, and ultimately then create a working model that will generate the appropriate monthly payments based on loan provided data from the servicers. We do that on a monthly basis, and it continues arguably for 20 to 30 years for the life of the deal.
Sure.
So it's a nice, strong annuity business that we have in place. We provide an extremely valuable service to our clients. And it gives them a significant layer of confidence before going out to the market with their final numbers. We cover about 50% of the market, commercial and residential mortgage-backed market, because there are certain trustees that choose to bring that tax work or keep that tax work in-house.
Sure.
That doesn't stop us from trying to meet with them and
Make new friends.
Exactly. But for all intents and purposes, we work with the Bank of New York, Citibank, Wilmington Savings Fund Society, WSFS for short, and Wilmington Trust. There are other parties in the mix that we do not cover, and that's what we do in a nutshell.
That's excellent. Thank you, Darren. And I've spoken to some of those trustees, and I know how much they value the services that you bring. Proportionally, how many of their transactions do you guys work on? So if they're issuing, 100 MBS deals into the market, how many would they be using your shadow and REMIC services for?
Yeah, generally speaking, that's a great question, Jason. That's a nice part about our business. We are not out pounding the pavement every week, every month, trying to get new deals. Once we're engaged with our clients, generally speaking, if they're given a deal, if they're mandated on a transaction that requires REMIC tax reporting, there's really no doubt that we'll get that work.
Okay.
So to your point, if they get 100, we generally get 100.
Okay.
Which is a nice luxury.
Their growth is our growth.
Exactly.
Good to be a utility service.
Exactly. Now, the one added bonus to that, we've as I mentioned before, we shadow their transactions on a monthly basis. Like I said, it's an add-on. However, there are clients that give us work that do not require the REMIC tax reporting. There may not be any tax reporting whatsoever.
Sure.
But they value that shadow so greatly that they still figure out a way to engage us. Sometimes it tests the economics of the transaction for them, but it does help our clients sleep better at night, where they can go to market again with with more confidence and greater accuracy, minimizing revisions and minimizing extra work on the back end.
Or ambiguity is the enemy of investors in those sorts of transactions. When everything's going well, nobody argues, but when some things go south, you want to make sure the calcs were correct.
Exactly. And the interesting part about that too, Jason, is we sit generally at the lower end of the food chain in this securitization process, but it certainly doesn't diminish our importance in any way, shape, or form. I would argue that the trustees have one of the most important roles, because where if you have an underwriter or structuring desk or whatever it may be, they're putting these transactions together. By and large, once they've sold those bonds to their investors, they kind of wash their hands of that deal.
Sure.
Which is fine. I mean, that makes sense. They've moved on to the next deal. We, alongside our clients being the trustees, have to monitor that transaction going forward for the life of the deal. So what happens is, on a monthly basis, and this is where our work tends to get a little bit unpredictable, you could have a deal that ties out, as we call it, with the trustee on a monthly basis for 10 some odd years. You get into that 11th year and something goes wrong, whether the servicing data is changed, there's a trigger within the transaction, and there's something that invokes a difference in our payment compared to our client's payment. When we have those instances, we have to stop and discuss those instances. Now, if it's just data driven, we can figure out the difference and make a correction. It's either our end or their end, or both sometimes. But when it comes down to the ambiguity that you reference, within each transaction, there are multiple documents that need to be followed and adhered to. Sometimes within one transaction, there are ambiguities or differences between the initial PPM or prospectus compared to the governing document, indenture or pooling and servicing agreement. So even within that one transaction, we have to work out which was correct.
Sure.
Oftentimes across a deal shelf, there can be ambiguities as well and uncertainties. And then across similar product types or structure types, we have to help our clients navigate the best way to decipher that language. So that's when we start to get involved with not only our clients, but then we start to discuss these items with law firms. And they ultimately sign off, but we're able to then add value and say, okay, well, if you went this way, this is what the cash flows would look like. If you go for this option, this is what the cash flows would look like. So they can make a well-informed decision on what makes the most sense and what was probably intended, particularly on a transaction that is years and years and years old, that did not contemplate some of the activity that's happening in the market today. So one key example would be when COVID hit, for example, and loan modifications were prevalent everywhere, right? So loan modification language was often absent, if not at least unclear in many of these documents. So when these things are occurring, you need to figure out ways to allow that securitization, to allow that transaction to handle that occurrence. And when it's silent in the deal docs, you have to get creative. And you can't just make it up on your own, right? So that's when you discuss with the client, maybe you discuss with rating agencies, you discuss with various counterparties within the market, you get comfortable with what you think is right. And then ultimately get some sign off from those industry.
And I'm aware you and a number of the team have a misspent youth at the rating agencies. So it's good to have that additional knowledge.
Absolutely.
And in terms of the types of transactions, you talked about MBS, but do you support other asset-backed securities?
Great question. Right. So, primarily it's residential and commercial mortgage-backed for sure, just mostly because of the tax reporting requirement. I mentioned earlier about the interest other clients have in just our shadow services. And oftentimes you can have, auto transaction, credit cards, student loans. We're working with one of our clients now on what they call CAT bonds, otherwise known as catastrophe bonds. So there are different structures that come into place that do not require the tax reporting. But again, they want to be able to sleep at night, our clients. They want to understand how those deal documents work. Are they interpreting them correctly? Are they getting to the right result on a given month? So yes, we're engaged to shadow those transactions. Now, in addition to that, there can be tax work. So for example, if a credit card or an auto loan transaction has a bond that's issued at a discount, that OID original issue discount needs to be amortized just the way it does in a mortgage-backed security. There may be some different accounting rules, but we have the ability to handle that as well. And we have been engaged with some of our clients and some of the the issuers directly on some of those transactions.
Excellent. Thank you, Darren.
Of course.
I think we've got time for one more question. So I can't be in the US and not ask about the economy.
Yep.
Obviously, we've seen some turbulent times in the last few months. What's that meant for your clients and your business?
Sure. Well, it's no secret that the mortgage and the mortgage-backed market, the securitization market, has had a significant boom in the past couple of years. It's been extremely resilient. Even a year ago, when rates were rising, there was definitely a bit of a blip, on the radar. But the banks still found ways to get the work done, to get their deals and raise funds through securitization. I think that the spreads, today on AAAs, et cetera, are widening to maybe a 40 or 50 basis point mark, but it's not cost prohibitive. The underwriters are still feeling strongly about the benefits that they're getting by going through a securitization financing network. Lately, I would say that it's been a stop and go kind of thing, just like our stock markets have been going up and down, right? So with the tariff issues that we see on a routine basis, just that uncertainty alone has caused various desks to halt what they were looking to bring to market. But then they get new news, and a week later they're bringing more deals back to market, and that's actually creating a bit of a backup.
Yep.
So then all of a sudden you see this influx of transactions. So even though the market has been uncertain, to say the least. Just last month, our clients, I should say, were mandated on 25 plus deals.
That's awesome.
So it keeps moving.
Excellent.
Yeah.
Well, the biggest capital market in the world, right? It can't stop it easily.
Absolutely.
Well, Darren, thank you for your time, and thank you everyone for tuning in. If you ever have any needs for asset-backed securities, US tax filings, or just have some questions around securitization, then Mr. Becker is your man.
Give us a call.
And he's done a great job with having no voice. So thank you.
Thank you.